I hate not knowing. When I see other people talking about market profile, order flow, footprints, this and that, I may not talk about it myself, but I hate not knowing. Nobody will tell you in the true sense how to trade and what they're looking for, because trade management is very, very, very difficult. This is my motto: high time frame levels, low time frame execution. It's competition, and the biggest point of failure that I feel is that people try too hard online to clout chase and show off their gains and this and that. Ultimately, it's you against yourself. Yeah, so Jim, I've got a question for you. I was listening to your stream the other day with Magus and Charlie, and you alluded to the fact that nowadays you lean heavy towards kind of simplified version of just looking at the charts to focus on trading. Whereas I understood when you first started out trading, you've gone through the whole process of auction market theory, market profile, footprints, delta, the whole lot. Just wanted to get an understanding of where you are now in your trading and how much reliance do you have in looking at footprints, or have you significantly reduced your time because you know essentially where you want to do your business on the charts?
I used to have like a specific sort of checklist of like criteria for specific trades, and I had like a tiered system of like quality of trades, and then I'd assign a size depending on the quality of the trade. Yeah, I just kind of eyeball levels more now. And again, it's just based on taking that many trades that you kind of know the reactionary levels just based on like pattern recognition and remembering. I'm basically just taking the same trades that I've taken for 5 years now. So I'll still look occasionally, like if it's in an area of business I want to do, basic SR levels. I'll get a quick look at the footprint just to see what the flow's like into that level. Like if it looks trappy, if you see, if I see significant selling into a buy level or significant buying into a sell level, that'll just give me the conviction to be like, right, time to pull the trigger kind of thing, just to narrow down the entries. My ideal environment is where I can be in the flow, like as soon as I get to my computer, as opposed to waiting for a level. If the tape speed's fast, I can just kind of jump in and out of rotations. That's kind of my ideal, if that makes sense.
Makes total sense. The reason I ask is because I speak to a lot of guys who are, primarily focused upon trading, have been learning their craft for the last several years. And it's fascinating for me because I started picking up market profile back in 2019 with order flow, went through various courses. I haven't really incorporated it into my own trading style in that much depth. But like at the same time, it's fascinating to hear other traders who've gone down the route and then taken a step back, and it always reverts back to just focus on the charts first and foremost. And it kind of consolidates everything I've always believed is that although it kind of became a buzz, market profile, order flow sounds brilliant, but truthfully, from what I've understood is it's primarily for me a tool of confluence, and it's not the only tool that you can use for confluence out there.
I also think once you've looked at enough of it, I can look at a candlestick and know what the profile looks like based on the candlesticks. I know that there's like an inefficiency at like 44,250 without even looking at any other tool. And that's the level, there's confluence of it being previous resistance. If I look left, I know that that's a level where I'm going to get at least a reaction to where I can then reevaluate if I want to take the short side, more than likely.
Well, Exo, did you go through that sort of process where you overcomplicated it for a while in your trading journey and you kind of came to this realization that, in the end, it is just confluence?
So for me, to be honest with you, I think the key aspect for myself was I hate not knowing, if I'm honest with you. When I see other people talking about market profile, order flow, footprints, this and that, I may not talk about it myself, but I hate not knowing and I want to understand it. It's just my innate nature. When I was a software developer, as a junior developer,
Oh,
it used to piss me off
interesting.
the fact that there were senior devs there who were 10, 11, 12 years more experienced than me. And I just hated not knowing.
Mm,
So I kind of go above and beyond. And I also find that by having that drive, it kind of accelerates your learning.
yeah.
And if you want to excel at something, you've got to go above and beyond, in my opinion. And it's just fascinating to me because, 80, 90% of my trades, I've never really looked at anything other than price action. And pretty much what Jim said, sometimes I look at naked charts and I can just tell there's going to be some single prints here. And where I find something like market profile probably useful, again, not for me, but for those individuals who are scalping around trading composites, etc., etc. When you get price coming out of a composite on a single print and reverts back in, fine. But for the time frames that I trade, do I really need it? Not really. I look at key levels. Primarily, I consider myself to be a supply and demand trader. identifying levels from that I believe will give a very good reaction to price. And then, so this is my motto: high time frame levels, low time frame execution. So it's an amalgamation of, okay, I don't want to take too many trades because I find that when I'm taking far too many trades, my performance drops. I'm much better off taking 1 to 2 to 3 trades a week with conviction and waiting for those setups. When those setups are coming into my zone, that's when I drop into the 1 minute, the 5 minute, and sometimes a tick chart as well, purely for execution. And I found that sometimes I may set up for a day trade or a couple of days max, but it can evolve into a much bigger swing trade because of the risk profile that I've set up
Yeah.
on the actual identification of the trade.
How long would you say it took you to actually find that flow where you realized the kind of frequency of trades you should be taking? Was this something like this year, or have you kind of found that niche, a couple of years ago?
I think it's honestly, I think my biggest inspiration was I bought Bitcoin in 2016, started trading in 2017, stumbled upon altcoins by buying a super course on Udemy for $12, figuring out how to use Poloniex. So, as with everybody else, you've made a shitload of money, you've lost a load of money. But I think the key for me was when I was going through the learning phase of journaling, systemization, looking at some of the best traders on Twitter with proven stats. One guy who comes to mind is WDM Forex. I remember him being in a Cresco challenge for 10 months and he only took 61 trades with some insane 2000% return on equity. And I thought, you know what, that's fantastic. He's not hammering out 3, 4, 5 trades a day. He's really just picking the best trades. So it kind of made me realize that, well, maybe I need to slow my trading down. And I guess that's why it's evolved into the system that I have today. I think the real conviction came for me in 2020, 2021 when I started to stop taking losses, become profitable. But that was essentially down to not taking substandard trades. But ultimately, it wasn't just about taking substandard trades. It was cutting my losses very, very early. That's been the game changer for me.
Well, what would you define as a substandard trade?
Substandard trade is no plan, impulsive.
Yeah.
Switch on your mobile, you see price go, and you think, "Oh yeah, this is gonna rip." Hit the buy button. You come back half an hour later, you're down a shitload of money. You haven't got any stops. It's purely impulsive with no real planning or foresight of, right, this is a level where I want to do business given this particular scenario. So again, it comes down to thinking in probabilities. Ultimately, for me, is what I like to think about. Is all right, if price comes to this level here, these are the scenarios that I'm planning for, if else. And we probably hear many of the traders say the same, but it essentially is that for me. It's thinking logically in probabilities. But there's a lot more nuance under that, as anybody can appreciate, especially if you trade on the lower time frame. It's how price comes into a level, what type of reaction are you getting at a level? Is there any fundamental driver? But also, looking at truly what's happening under the surface. Is that absorption? Is that exhaustion? Are longs piling into a level at resistance, or at shorts absolutely piling in at the lows, but you see stacked imbalances and price gets back above? That's the long for me with a clear invalidation. Whether the trade plays out, I don't know, but it's thinking in probabilities that, all right, there's a good chance that the trade could play out, could nail a 3-4 R here. Otherwise, I just take a loss or cut it very early.
I think it's something that's overlooked a lot by traders in this space is statistics and probabilities. Like I'm mentoring a friend at the moment, and they're so focused on trying to take trades that are going to win, and I'm like, throw that idea out the window for now. I want you risking like $5 a trade, and I want you to go and take 100 trades, because you're going to learn more if you lose all 100 trades. We can then refine the system. Like, there's 100 losses is actually more useful than like 2, 3, 5 wins, because you can basically, it's just like more data is more important as far as like being able to refine a system and know what your strengths and weaknesses are.
Yeah, I agree with that, Jim. And just to touch upon that point, I was making a statement the other day, or a comment in the Paragon, that quite often we hear traders preach that if I take 2, 3, 4 losses on the row, I have to stop trading for the day or for the week. I think that's, personally, in my opinion, that's bullshit. What if I take 6 losses in a row, but each loss I cut very, very early, just as I'm offside, and then my 7th trade, I finally nail it? And that kind of ties into my current execution system. I have like a baseball rule, three strikes to get my execution right. Sometimes, and by having that approach, it doesn't tell me initially that the trade setup was a bad idea. I just need to work on my execution. And I found that in 2020, 2021, I was entering too early, cutting the trade, getting back in again. Exact same setup, but my timing was slightly off, whereby I was nailing trades on my third or fourth entry. Now I'm nailing trades on my second entry on average, sometimes a third, if I'm over eager. And this is where a level of fear of missing out, not just on longs, but on shorts, fear of missing out. I try to get in a little bit early sometimes, even if it's just a small size, knowing that I'm happy to cut the position if I'm offside, because if I'm offside and price gets back where I want it to be, I'm going to go with more conviction at that point. The reason why I've accepted being early is because we're not guaranteed that price may trade a certain level in a certain way. So, a common setup that we all see now is sweep of the highs, sweep of the lows, or deviations, call it what you want, but that's one of my favorite setups. And it ties into what Jim says, really. It's really about understanding where your invalidation levels are. And the biggest single change in my trading is not thinking about, right, if I jump into this trade, how much money can I make? I'm always thinking, where am I going to be wrong? And at which point do I have to absolutely get the fuck out of the trade? And there's nothing wrong with that, because I know if price goes against me by 30, 40, 50 basis points or whatever, and it comes back down to my level where I want to trade, I'm taking the same setup all over again. Whatever happened outside of my zone was just an anomaly or a deviation to the scenario that I planned, and I take the same trade setup all over again.
Just to add to that point, one of the things that really helps me in that sense is assign a target before even looking for an entry. And it'll be a high time frame target, and then it's a case of how far away from that exit can I get an entry, because it basically makes as tight an invalidation as possible, basically. So I always try, because I used to focus so hard on getting really good entries that I'd get into a trade and I'd be like, right, what's the plan now? Whereas now it's a case of, if my target is a sweep of like 41.8, let's say, I want to be getting as far away from that, like as tight invalidation as possible, really.
Yeah, so I was honestly just quite curious because, like, you're a very big account now. Like, you've got like 400,000 Twitter followers. I think, do you find that makes it a lot harder to be wrong? Like, because obviously people are following you looking for guidance, and whether you like it or not, they're probably going to be copy trading you quite a lot. Does that make it harder to have that kind of strategy where you're okay with, not sniping the perfect entry and having that invalidation? Do you feel like a lot more pressure and actually having to be very accurate? Otherwise, you might face a bit of backlash.
It's an interesting question, and it's something that I've thought about. Twitter for me was just some fun social place to hang out, initially share my trade ideas, look for people to criticize me in my early days, to see, it's just having the confidence to share my charts. And everybody's fear is being wrong on Twitter,
Yeah.
but people don't realize that some of the best traders only have a 40% win rate.
Yeah.
I think what's changed for me is I've never really taken Twitter serious. I've never thought of evolving into some paid product or paid group or paid service. And I'm not mocking anybody who does. There's some great traders out there that share a wealth of information, each to their own. So I've always been free spirited. I think, as you've probably seen over the years with SC and a few others, I've really got into being an annoying account that shitpoles far too often in a bear market, because there's nothing else to do really but to short the market. But you know what? In all honesty, I don't feel no pressure anymore, because to me, look, my best trading comes when I pay very little attention to Twitter, and I discovered that again in 2019, 2020, 21. Just be yourself, be authentic, be real. At the end of the day, when I was shorting the market in the early stages of 2022, I was getting a lot of shit, but I think come at the end of 2022, early 2023, I just had so much conviction that my conviction was proven to be right, especially in the crypto space where shorting is a crime, is a sin, or whatever. It's just unfortunate. At the end of the day, I just see it as a trading opportunity. So I think my outlook for 2024, I've really been more reserved in heading into 24, 25. I see so many accounts now sharing the same kind of setups, the same ranges. Ranges have become very popular. So as market profile and people showing delta divergences. I've kind of lost interest, to be honest with you, with sharing as much as perhaps as I used to do, just because of the saturation of the space.
Yeah.
But I think that's also beneficial for many individuals. You've got the likes of, Jim, Magus, SC, Charlie, so many of the traders that are sharing a wealth of information, not only on Twitter, but on streams as well. So, in terms of educational purpose, there's something for everybody out there, depending whether you want to pick up footprints, price action, RSIs, oscillators, But I think moving forward, for me, Twitter is just a social time pass, nothing more.
Do you still feel there's some sort of responsibility when you make a post, like knowing, yeah, for better or for worse, there's people who are going to see you as all-knowing and omnipotent trading legend, and then yeah, following blindly into the fray?
Well, that's the thing, isn't it? You can either be a plan B or you can be a kappa. You can call for 250K by June 2023, and nobody gives you shit
Yeah.
apart from when price tanks. So you can just get absolutely annihilated for cap. But as kappa has been for calling for 12K on the way up. So
Yeah.
it's you can get 99 long trade. You can get 99 shorts correct on one wrong. You'll get absolutely fucking annihilated on the one that you got wrong. But you could get 99 longs wrong and become a hero for nailing that one bottom trade, whether it's Bitcoin. So each of their own, but it does deter me from being my true self. Like I'm very passionate about trading. I love sharing just charts and setups, but it kind of deters me nowadays. I've really lost my passion for doing so, especially over the last 6 months. I don't do as much anymore. Couldn't quite tell you why that is, but
Yeah, maybe you need to find something that excites you again. Well, I mean, you kind of touched on it slightly, but the one thing on this note I really wanted to ask as well was, have you found that with your growth, because I feel like you had quite a rapid growth this year and last year, like have you felt that that's influenced your trading at all, like your style of trading? Like obviously posting is one thing, but yeah, I'm quite curious about your trading itself.
absolutely. If there's anything I preach to people is jump on stream, share your views of the market. I think one thing that I've tried to do quite actively, especially in 21, 22, 23, I've been streaming since September 2020, was generally provide real trading setups on stream and following those up on Twitter. I think perhaps that's what caught a lot of attention. Whereas, again, each to their own. I'm sure everybody's got different comfort levels. You'll just see certain traders just drawing
Oh, yeah.
boxes and saying this is resistance, this is support, but nobody will tell you in the true sense how to trade and what they're looking for. We are starting to see that, and I really tried to go above and beyond to really refine my execution down to the 5 minute. Look, this is what happens. If this happens, this is how I'm going to look to get on board. This is how I'm looking to execute purely from a price action fundamental perspective. And the reason I've done that is because when I look back to 2016, 2017, 2018, other than SC, I'm not sure who else there was that I could learn from as a trader. So I've tried to give back to the community something that I wish I had myself, learning price action, learning trading concepts in a simplified process. I'm not a scalper. I'm not a hardcore day trader. I could be if I wanted to, but it just doesn't suit my lifestyle. I'm somebody who is willing to wait for 2, 3 good trade setups a week. And if they come, great. If they don't, not a problem. There's always next week. And what you find out there is that there's many aspiring traders trying to make that transition of becoming a trader, but they have to have a work-life trading balance, and it's not easy. Stepping away from work increases the pressure tenfold in trying to succeed in trading. I certainly had that issue, from quitting my job in January 2018, literally the bull market top on Bitcoin, caught the alt season, and then before you know it, November 2018, Bitcoin crashed. I'm back in my job as a contractor, realizing that I need to spend another year learning how to trade
Yeah.
and have a system. And it wasn't until the end of 2018 that I first finally created my manual trade journal with Sting, who inspired me to do so. Where, like I said, that was the turning point: journaling, systemization, qualitative and quantitative analysis.
God, that's funny. That comes up in every guest. Yeah, it's always journaling is a hallmark in success.
I've always said it as a trader: if you can't explain your own system, just one strategy to anybody, then you've really got no business trading. If you generally cannot explain one setup and why, and what you're looking for, and what rules you follow, then you've not thought about your trading. And the only way you're going to think about that is writing it down, whether it's a flow chart, whether it's on a document, or whatever it is. You need to have something down to extract what's in your mind on paper, because that's the hard part. And that's what took me time creating my first trading manual, not even a trading journal or a plan, trading manual. And that for me took 3 months. It was such a long process, but it was ultimately the start of when I started to see an improvement in my own trading.
Did you actively pursue a career in trading, or did you realize, as you were going along, maybe when you were still working, like you maybe had a bit of a knack and you tried to do it side by side, or were you like, okay, no, this is it, this is what I want to do, I'm gonna put my like resources into this, and yeah, try and come out the other side?
So I used to work in an investment bank prior to trading. So as a software developer, I was working alongside traders, writing code, systems, platforms, and it was always a fascination that the traders on the desk were kind of like the poster boys. Oh, look, here's a trader. The big guys walking around. I thought to myself, I'd love to learn how to trade. Just to see what they're doing. It looks like fun, and I think that's what kind of inspired me. Like I said, I didn't even know that a world existed, which was altcoins until 2017. Just bought Bitcoin, and that was it. So I think when you realize and when you see the opportunities in the crypto market ahead of any other market, it just sucks you in. And once you're in, it's so hard to get out. It really is. Even to the point where in 2017, I started with 5 figures. I was very close to 7 figures. In March 2018, took an 80% drawdown. So I've been through all the emotions that, and it is an absolute emotional roller coaster. Sometimes you want to quit. Sometimes you just think, fuck it, I'm just going to walk away, but you can't. It just sucks you right back in again. And I think eventually that's just determination and passion. How bad do you want it? And there's a lot of, clout chasing on Twitter, but ultimately it's competition. And the biggest point of failure that I feel is that people try too hard online to clout chase and show off their gains and this and that, the other. Ultimately, it's you against yourself. When you come to terms with that, when you accept it's just you against yourself, fuck what everybody else does. You're there to take money off the table. You're there to take money off your friends, off somebody else. That's what trading comes down to ultimately.
It's the perfect like ego management sort of thing. Like I don't really have many outlets for sort of being sort of egotistical, expressing ego, because you need a certain amount of ego to have the confidence and almost exuberance and arrogance to presume you're going to be right on something. I've had periods where I like feel like I'm in God mode,
Yeah.
and then
Yeah,
you take your eye off the ball, and it humbles you instantly, and you get that that's why I love it, because it's
Yeah.
constant managing of ego.
Yeah, it'll put you in your place.
I think it comes down to two things or three things. I'm going to be brutally honest. I'm not going to sugarcoat it or bullshit. For me, I think one, it was when I was pulsing trades. One, it used to help me think about my trading. Like, am I happy to share this setup online? Do I have confidence in sharing this setup online? Yes, so I'm going to post it. Has it done well? Cool. I'm going to follow it with a tweet. Look, price has gone here, as you do, and people like that. It kind of helps grow your account. I've never really had the intention, to grow an account to 400, 500,000 followers or whatever it is. And again, it doesn't really mean anything to me. I really value giving back to individuals who are looking to trade knowledge or experiences that I've gone through. The second point is, yeah, it's confidence and conviction when you've been absolutely shattered on for pulsing a trade setup, especially to the downside. People are quick to criticize you, are you going to get wrecked, and this and that, the other. And then to watch it play out, it does give you some sense of social satisfaction. But at the end of the day, what matters is how much size did you really put on that trade. And I see so much of it nowadays. Everybody's a chartist. Price went from A to B. Look, I called it. I'm calling bullshit, because how many of you actually traded it? Because trade management is very, very, very difficult. But that's the side that we never get to see. We never get to see truly. Anybody can call a trade and show the chart before and after. But did they really trade it? Did they trade it with any conviction or any size? We never know.
It's the danger of those P&L cards where you can hide the size, just show the percentage. You never know.
There is that. I mean, I've done that, and I'll openly admit to doing that. But I think there was a time or a period where majority of the time when I did do that, it was essentially to validate the setup that I discussed on stream. Like, hey guys, here's the setup that I shared on stream, and I went over my trigger points, and here's my execution. So I'm not just talking the talk. It's like I did take on the trade as well. And yeah, we've all done it. Sometimes we stay silent because we daren't put our balls on the line, and 6 weeks, 2 weeks later, trade goes in our way, and here's a P&L card. Why not? There's always a temptation to do it, but I've really cut back now significantly, and it's something that I'm trying to drift away towards now, because I just think there's only so much you can do before it becomes cringe. And like I said, I've got nothing to sell, so why the fuck am I doing it in the first place? I've no idea. But there
Yeah,
you go.
why are you doing it, do you think?
You get to a point as well. You get to a point where, like, I only really share useful stuff on the stream because I know it's people there that actually are interested. You get to a point with Twitter following where there's about as many people that don't want to follow you as there are do want to follow you. And there's just there's like 50% of my followers are waiting for my downfall on every fucking tweet, it feels like, and it just becomes so unnecessary.
Does that fuel you at all?
No, it makes me want to fucking delete my account, honestly.
No, I think me and Jim are in the same camp for being somewhat, I wouldn't say pessimistic, but somewhat on the defensive. But lo and behold, I think ultimately, I'd much rather safeguard people than getting people wrecked, if that makes sense. Where you're shilling shit every single day, and then you watch price just come tumbling down. So you see that's the thing with somebody like me. I'm probably perceived as being this bear tard, but ultimately, my reasoning is when I'm presenting information, if people want to take a trade, they can do. For me, ultimately, how I think about trading is risk management first. And like I said, that comes down to where am I wrong first and foremost, not how much money can I make on this trade. It's at which point do I need to get out of the trade. You can make 1,000 trades, do really well. It only takes one trade to destroy your account with some bad trade management and oversizing. And we've seen that on Twitter. We saw people with 50% P&L drawdowns in the last 2 weeks when Bitcoin spiked down. It's like, again, I'm not mocking anybody, but it's just not something that would sit well with me. Say you're up $1 million and you're back down to 500K in a week. I'm sorry, but I mean, each of their own, but for me, that wouldn't sit well with me.
There's too much promotion of bad, just bad advice. Like, even people like saying let it run and shit like that. To an extent, yeah, but that's completely like giving up any responsibility to the fucking market gods, There's never any information on like how to hedge your exposure. Like the way I see it, if you're spot long, the only thing you need to do when you spot long is have the ability to hedge your exposure at each inflection point, which no one does. They just sit through the inflection points and hope that it keeps going. There's no real, like, no one ever talks about hedging or anything.
I think it's because everyone experiences both those kinds. There's like those two key PTSDs for most plebs in the market, which is selling too soon or selling too late. And like,
we're at monthly and weekly resistance on a lot of shit. And I read it over the last 2 days. Sit and do nothing, log out. It's the time to log out. I'm like, you're an idiot. No, it's the time to probably go neutral, hedge at least, and wait to see which direction it goes. Because you're literally playing with fire.
It was like everyone memeing on Ledger when that guy was up 7 figs on Bonk, and he was like, "Please sell," and everyone was like, "Boomer, boomer."
I think the discerning factor here is, guys. I think the crypto space is very unique, and I think unique in the sense where there's there's a subset of us who are traders, and then there's a subset of people who generally aren't traders and they're purely speculating on a lottery ticket, is what I call it. And they only feel the pain afterwards when they suffer a significant drawdown, would have, could have, should have. But it's difficult, and I think that's why there's so much commotion on the timeline between bulls and bears and traders and versus hodling. You don't generally see that in the FX community or people who are trading ES or NQ or tech stocks. I've never seen a bag of emotions as I haven't on crypto Twitter. And I think that's primarily why people, from what I understand, aren't largely traders. They may consider themselves to be traders, but buying a few spot bags is not essentially trading. You're just speculatively investing, and that's fine.
Yeah.
But it's those speculative investors that start shitting on traders saying, oh, you're going to get rich, you're going to miss out. And I got it when Phantom was something like $2.53. And I said, I'm shorting it. This is the absolute top, I think. And I did. But then you get a bunch of Phantom fanboys telling me EXO doesn't understand the tech. This is like, look at the daily transactions on Phantom. It's got the most throughput. And I was like, yeah, that's a fucking top signal for me then, isn't it? How much more throughput can you get? But, it's again, looking at the tech and the fundamentals versus looking at price, you've kind of got to marry the two together, in my opinion. So, I think that's what it is. It's just a segregation of various communities and various approaches in crypto that are unique in characteristic.
Well, I think the thing I saw today, which is why I don't bear any, like, the tech means jack shit to me on any of it, is I can't remember which airline it is. This has the same market cap as Bonk.
Oh yeah, it was Spirit Airlines.
Yeah, and it's just like, okay, well, there you go. That, what more do you need to know, really? It basically tells me that Bonk's doomed forever. You know, it's completely overvalued. The ability to lift it any higher is pretty much, you know, it's a flash in the pan. It's done.
I can't get my head around the valuations.
Well, it's quite easy to exaggerate valuations based on slippage and leverage, basically. You know, if people think Bitcoin's market caps, what is Bitcoin's market? 800 bill or something?
Yeah, but when you think of Cardano at 50 billion market cap.
I mean, what's the available liquidity on a Cardano? It's not, it's probably not even a billion, is it?
No, I was going to say peak of 2021. I think Cardano was, I could be wrong, I'm quoting off the top of my head, $50 billion market cap. How? It's an irrational market, of course. But it just amazes me that something can be valued so highly.
But the thing is, there's not the liquidity to actually move it back down to its actual valuation. You know, there's not enough liquidity to sell it. You know, it can't even reach its market cap because there's not enough liquidity to actually move it. Really,
a lot of exchange tokens have this, where there's no perps for the token. So, not to name names, but most of the big ones, you literally can't short them. Some of them will be literally like in the top 20 in market cap with 100k daily volume. Like, is insane because obviously no one's trading them. And Cardano's in this weird spot where it's in this strange part of the retail journey into crypto, where it's kind of that thing you first look at after Bitcoin and Ethereum, and then you read about smart contracts and you're like, oh my god, that sounds amazing, not realizing it exists elsewhere. It's very weird. I don't really understand that one. And also the secret to having a high market cap is simply being a layer one. If you guys want an infinite money hack, start a layer one and raise some money and probably do an airdrop as well, and then you're rich. Simple as that.
Well, I mean, when I was in Singapore, it's pretty much the only thing anyone was coming to me with was layer ones, layer twos, layer threes solutions. And I'm like, and they're like, this one's different. I'm like, oh. Yeah, I'm sure. Sure, it's different.
To be honest with you, Jim, I kind of love the space for that reason, because it's so easy to play the narrative sometimes. When I used to love 2018 and 2020, 21, you just see these different sector rotations, oracles go, and yeah, you're never going to get the leader, but you can always catch up on the laggards. And I think that's the beauty of this space, that it gives you those opportunities. You see some L2s, you saw OP running, and then ARB started running along with you had what was it, Say Network, and then Sue started running as well. So it's just really nice rotations to play in these conditions.
Yeah, you saw all these meme tokens as well.
Yeah, I've never really traded meme tokens.
WIF is up 30% currently, whilst everything else is slowly bleeding.
See, that's the future of France right there. It was always
getting
WIF.
Doge PTSD. I even lost the plot with Doge at the end there. I got fucking
that was the downfall.
Bull-tarded on Doge. It was little.
So, XO, I kind of wanted to talk a bit more about, because obviously you did touch a bit on your journey and, you know, your previous career and software development, but I'm quite interested in your life outside of trading, because you were saying like nowadays you're not taking as many trades as you were before. Like, what does XO do in his free time when he's not sitting at a screen punting?
Honestly speaking, obviously I'm in my 30s, spend more time with family, friends, pretty much into health. I live a very simple life. I think if you want to be successful at trading, you have to remove all the bullshit in your life. You have to be focused. You have to have discipline. You can't have too much kind of noise or have an erratic lifestyle, in my opinion, or from what I've understood. The more distractions you have, and especially when you're trading size, the more prone you're going to be at taking significant losses or bad trades or impulsive trading. So really just living a very simple, quiet lifestyle more than anything. Just go to the gym, work out, spend time with family, and just live a very simple life, in all honesty.
Do you have any kids?
Do a bit of coding, play sports. I do, yes, I do, yeah. So
has that changed your trading at all? Like a bit more responsibility?
Yeah, it certainly has. No, it certainly has. I mean, like when I was trading on BitMEX in 2018, gone are the days where I used to go to bed at 2 a.m., run downstairs at 4 a.m. and realize I'm about to get liquidated, smash something or smash my fist on the glass table and think, for fuck's sake. And being positioned in trade like 80% of my account, to nowadays it's like, all right, cool, I've missed a trade. Never mind, next one.
Did it affect your ability to sort of take on risk, knowing you're not It's not just yourself you're responsible for.
No, because I mean, it's not so much risk. It affects my ability to just come to terms and come to peace with if I'm going away for this day for some appointment, or I need to be somewhere on this day. There's a fairly good chance that I'm not going to be trading this with significant size or six figures. I'm just going to cut it down. I've got several accounts, Jim. So one of those accounts is literally a 5-figure account. That kind of takes away the urge from taking shit substandard trades or being impulsive, or just kind of thinking, actually, I like this setup here, but I won't be around to manage it fully as much as I'd like. So I'll still take it on. If I get it right, nice. I'll grow my small account. There's a fact, and I'm a big believer of this 80-20 Pareto's law, Pareto's principle. 80% of your wealth comes from 20% of your trades. And it's probably true with a lot of people out there who catch a bull market and make most of their money in these type of conditions or in the 2021 conditions. The problem is how many people actually go on to hold that, holding your capital, holding your money, or realizing your profits. It is a key differentiating factor that many fail to take advantage of, or even grasp. So, and the thing is, I guess my point of view as well, for both of you, I'm not sure how we would define as making it. What is making it? Am I comfortable? Am I financially free? Absolutely. I'm truly grateful for the opportunities that trading has presented, this market has presented. So I'm not in a position as where I was in 2017 or 2018, 19, 20, where you're trying to make it as such. You can now be more selective. And I think that takes the pressure off trading, looking for trades that aren't really there. And I think that's the differentiating factor for me in terms of my mindset and mental state. So,
Do you ever find that you can be too selective? I know that's something I struggle with recently.
I think that's a good quality to have, though, Jim, because if you're being selective, you're going for the best optimal trades that you feel where your conviction is. And I think this is another factor where I've talked about in previous streams where context is king. You can have a strategy and deploy that strategy, and you can fuck up. It could be a fantastic winning strategy in previous years, but for now, all of a sudden, it's a bad strategy. Is it really? Or is it that the trader is not executing that particular strategy in the most favorable contextual environment as a trader? So I think there's a level of that. And I'll give you a classic example. 2022, for me, that was easy swing market shorting all the way back down. I could not get the swing trades off in 2023, and I realized that. I talked about it on my own streams, that don't be looking for those big swing trades because they're not there. You can't hold a trade for 5, 6, 7 days anymore. You're really down to 6 hours, 12 hours. Even that is probably considered to be a day trade, no longer a swing trade. So it's understanding what the market is giving you out there, what the average ATR is, what the volatility is out there, and truly working within those defined levels or ranges on those lower time frames. So again, I don't want to waffle on, but if you're if you're looking for trades off a daily level when there's no volatility, well, good luck to you. You're not going to get anything. So you really have to adapt accordingly to the time horizon that suits. And again, many people look at rotation factors. If they're playing rotations, what's the rotation factor? So you've really got to understand the environment that you're trading in to ascertain which mode do you need to shift into: swing, day trade, scalping, whatever it is.
You mentioned just like dialing back a little bit on kind of being comfortable making it, these sort of things. What is still pushing you to trade, would you say? You're trying to leave like a legacy, or is it maybe education? Or I'm quite curious. What keeps you going?
I think ultimately, look, we all trade because why? Because we want to make money ultimately.
Yeah.
But I see trading now as a game more than anything. It's like me against the market, and you want to be the best. But what does the best mean in this space? You're not competing against other people. You're competing against yourself. So again, it's that winning mentality, that desire to win and make money. It can pay you well, or it can absolutely destroy you. So it is very draining.
I think that's an important point as well, actually. In this, I see a lot of people, they're like polarizing in the sense they're trying to beat the market as opposed to it being against themselves. They want that told you so moment, and it ends up just destroying you. So I think that's a really important takeaway is like focus on yourself, king, kind of thing.
Yeah, it is. And I think Dante nailed it. And I'd consider Dante as somebody who's had a big impact on my trading from a psychological perspective. Your biggest edge is your discipline, not your systemization. It's
Mhm.
knowing when to trade in which environment. And again, discipline is what's key for me. Knowing when to absolutely floor it versus when to just take scale back the size and just scratch around and just take a few
Mm.
trades. Again, that comes with conviction. So
It's like you were talking about Will earlier. Is it Hunting? Will Hunting?
yeah, Will Hunting, yeah. Yeah.
He's probably my absolute favorite account on Twitter, to be honest,
Yeah.
because he has this most simplified system, and he just posts it, and he'll put like a green screen video over the top of it, and it's just the best content ever.
Will's a great account.
That is literally my favorite content. I'll go through his media just to make sure I haven't missed any. It's that good.
True fanboy. Do you ever see yourself stopping trading? Like, is there a point in mind, an age, or just?
I honestly thought that after the last bull market and after shorting the market on the way down, that I would have slipped into just 4 or 5 big trades a year. Well, that plan failed. Took about 4 or 5 trades in the first week, in all honesty. So, like I said, the market just sucks you back in. It's just the passion, the challenge, I guess, is where I love the most. And
Well, how about on the socials? Do you see yourself stopping tweeting eventually, or?
my tweets have gone down 70% over the last 3 4 months, primarily because of I had COVID back to back. But
Oh, that's
no,
right.
I just yeah, it was pretty rough actually. But it is what it is, and that's primarily I'm just trying to focus more on health. Eating healthy, training healthy, and being way more active like I used to be prior to trading. I was literally playing sports 5 days a week. So I don't know, social media. I guess I've really I just feels like everybody's sharing the same content, the same levels. It's not like it used to be back in 2019, 2020, 21, 22. And that's great, like I said, but I've kind of lost my passion because I realized that I was probably getting carried away with too much shit posting in 22, 23, probably annoyingly as well. Regretfully sometimes, yeah, but sometimes we just say things out in the heat of the moment. But ultimately, I just realized that Twitter is actually a fantastic platform if used correctly in extracting value. And I'm going back to basics, going back to how I first used to use Twitter when I was trying to make it. So the way that I'm trying to approach the markets now in 2024 onwards, recognizing that look, we could eventually see a bull market in the next X years. I just want to play the same playbook all over again that made me successful, but with more conviction. It's doing it all over again, but with more conviction this time around. That's finding good projects, low caps that can go on to give 20, 30x multiples. And then when it's time to short the market, go even harder on the way back down because I've been there and done it once, successfully. Tried in 2017 to 2020, failed. Believe it or not, I think when I got smashed in 2018, I always promised myself that I'm going to come back and absolutely nail the market on the way down when it's time on altcoins. Because of the pain and the suffering that I had in 2018, I've never got over that. And I think 2022 was kind of like came to peace with it.
How did you come to peace with it?
Shorting the market in 2022 and proving a point that, fuck you. You're not taking my money back off me.
Yeah.
And I'm going to absolutely rinse the market on the way down. And that was it. I think the funny thing is I didn't even make as much money as I did in 21, but 2022, my trading stats, and 2023 for the best part, phenomenal trading results, sharp ratio above 2, expectancy win rate of just over 70%. And it's just looking to improve on that now. And even now and again, just trades that I don't share online, they can be substandard, but that's just me dossing about on a small account, just trying to find ways of improving my systemization. So it's kind of a learning process still. I think you're always evolving, but I feel as though I'm at a point now where my trading for me is very simplified. I'm very comfortable trading the charts. When I see a setup, I've got conviction in there more often than not. But humble enough to recognize that I could be wrong at any point.
I think I was just going to comment on the drop in quality on CT in the last year. I don't know what happened. Did people that made it, that gave good advice, leave? Or did we just get inundated with people that don't know what they're talking about from 2021?
I don't know. It's an interesting one. I think, man, it's a tough one. I think, in all honesty, it's maybe we just had a bear market. Jim, a lot of people got screwed on the way down. You read Coinfessions, and again, when I think of Pareto's principle, 80-20, I think 80% of people probably would have lost a lot of money on the way down. And there's a lot of regret. Would have, could have, should have, people blowing out accounts and the whole unfortunate FTX debacle, and it is unfortunate. It's sad to see, and that's something that, again, when I was talking about that on my streams, and I used to vocally mention that it's probably time to get out of the markets here, price is going to go down. Essentially, that's what happened, and again, that's the thing for me. It's like everybody can make money on the way up. You can become a genius on the way up, nailing these projects off the lows, but it's recognizing risk to the downside. Just take your money, run, come back for the next cycle, do it all over again. Use a simple set of moving averages that cascade from the 4-hour to the daily. You'll probably outperform most of the market.
Exactly. And again, going back to like hedging, if you've been long for months on Bitcoin, we're up into 50K, just stick a hedge on, like if you take a loss on the hedge, you're not actually taking a loss. You just, you're not capitalizing on maximum gains. If it breaks to the upside and we start going up again, then take the hedge off. It's simple things like that. If you hedge correctly in consolidations, if the market does turn, you're so well positioned. As someone who's probably not comfortable shorting, you're so well positioned in that scenario to where you can then capture some downside.
Yeah.
God, it's so funny. This is like a perfect advertisement because Hedge Mode just went live on WooX, so it sounds like we've been setting this up to plug that at the end.
Use my ref link, guys.
Yeah.
No, I absolutely love hedge mode. Even in my trading, I use hedge mode so often at key inflection points to just be delta neutral and decide whether I want to hold this into a swing or whether I just cut it and let price go the other way now.
I think it's the most underutilized. When you're up so big on a spot position, it can be you can be so like complacent and lazy about potentially giving back gains and stuff. You got to implement. It doesn't matter what strategy you're doing. You got to implement discipline. There's too much just poor.
I think on the back of that, I think we will see the emergence of options grow in the crypto space, in my opinion. I think options is going to be a great way to hedge out positions in the future. Certainly something, like you said, Josh, what keeps me going, it's just that desire to keep learning. Would I consider myself a successful trader? Yes, I think I've got a profitable system. It's proven to be the case so far for me. And again, it's not about proving it to anybody. It's just myself, that's all that matters. I'm not here to prove a point to anybody but myself. I think that's the one thing that people need to stop doing is stop worrying about other people's trades. Who gives a fuck if Capo's calling for 12K and what? Like, leave the dude alone. If he's gonna call 12K, yeah, have a bit of banter, but don't worry about his book. Don't worry about his position. Just worry about your own, and life will be much better that way. And on the back of that, like I said, it's just I just feel as though I don't know enough or as much as I'd like to. And I think there's even in macro, even in global markets, even in Fin Twitter, there's just so much to learn that it's a passion of it's just not knowing and the passion of wanting to know, I guess, is what consumes me.
Well, where do you look to start learning? And like, because I'm just thinking as like a perspective of someone listening in, and like we often touch on this sort of topic because I can imagine we got aspiring traders always hearing about people trying to put the time in and get better. Like for you, what would that look like? I mean, obviously you're at a different stage, but I'm still quite curious.
It depends what you want to achieve. Do you want to learn about macro and understand how the economy works? Because that's not essentially going to make you money as a trader. So it's just understanding what is it that you wish to extract? What is it that you wish to achieve? Is it more knowledge? Is it an understanding of economics? Is it understanding of what makes markets move? Is it understanding rates? Or is your goal simply to make money? And I guess the large majority is to make money. Well, fine, that's good. Then that should be your primary focus first and foremost. Get into a position where you're somewhat financially comfortable, and then perhaps you've got time and less pressure to make money consistently in the market because you're on a lump sum of capital, and you can now delve into those other areas of being inquisitive, I guess. Just to answer your question, kind of went off path there, but yeah, just honestly, people mock paid groups and services, but it's like with anything. If you want to get education, you've got to pay a fee at university. So why is it any different with trading? If you want to just blow your money over the next 7 years because you haven't got a clue what you're doing, then you're going to pay the price for that. I'd much rather pay £1,000, £2,000 or dollars for a 12-month subscription for some paid service to some individual who's got a proven track record of delivering content and knows what they're talking about and is a seasoned pro. I'll pay 2,000 because I know that's going to save me from blowing 20k stupidly down the drain.
It's like the people always tell me, get home gym. If I get home gym, I'll never work out.
Yeah,
ever.
I'm the exact same.
But if I'm paying 25, 30 quid a month, I'm going to the gym to get my money's worth. It's accountability.
in COVID, I had my own treadmill out. I didn't even buy one. I hired one out, right? It was pretty decent. Had it for 2 years, probably used it 12, 13 times in 2 years. It's next to my desk, literally next to my desk. Never used it. Hardly ever used it. So yeah.
It's funny you say that because it also weighs into something I was about to add to what XO was saying, which is about like one of the biggest benefits, and we talked about this with our episode with Pierre, is the social aspect of being in like a group. Like for me, that's what I attribute all my success to, was the circles I was in. And when I was early days in one of these kind of paid groups, I enjoyed just like looking, like chatting to other people. It wasn't even necessarily about the leader and the signals and stuff like that. It's like just having an environment where everyone's talking about similar things. You make friends, you share ideas with them. The classic thing is sharing like shit coins and buying the same shit coin they're buying. And the gym is a fun, like not gym, but the gym is a funny comparison, which is why I could never do home gyms. And what I struggled with COVID is that motivating factor as well of being like in a social environment and having more of this inclination and kind of to perform, I guess.
I just got such a nostalgia flashback actually when you said about groups. The first group I was ever in was with EXO. It was the Bagman.
Oh yeah,
that was my first introduction to like a group setting where I was sharing ideas.
2019, wasn't it?
Yeah.
2019, yeah, 2019.
Yeah, I think it was either back in 2018 or 2019. But good times.
You've absolutely hit the nail on the head there. I think social network, connecting with like-minded people will take you very far in this game, especially in the crypto space. I don't think I'd ever be in this position if I wasn't connected to some of the individuals that I have been. Very fortunate to be in some of the best trading discords that were free at the time. You know, there's the infamous PDF, which had the likes of Sting, Tommy, Cube, and Glim. Trade Keck and a lot of the other boys in there, and like I said, all the content that was being shared in there was like real high value at the time that you wouldn't find on crypto Twitter. Looking at market profile, order flow, understanding open interest, tools that pulled out open interest for you, which wasn't available on many platforms. So it was really ahead of its time, I think, in terms of CT. But
I'm getting sad thinking about it now. Those were the days.
You got to get back on the ground, Jim, I think.
Trading on BitMEX was great. It really was. It was just very predatory, put it that way. And it was just a different dynamic altogether back then.
It's a very soft market nowadays.
Yeah. I do miss trading on BitMEX, Jim, because, oh man, you just know you're going to get a swing fail on the highs or the lows almost certainly most of the time, if not every time. And you wait for those taps into liquidity. You just don't get them anymore nowadays. It's just
I know, like that was the beauty of BitMEX, is it would wick more than the amount of times. I remember when I switched to Bybit and I was getting so pissed off because I'd be leaving limits where I know I'd get filled on BitMEX and it'd miss by like I don't know $10 on Bybit, and it was quite an adjustment period. It was so frustrating because the market makers and apes on BitMEX were just a different breed. And I used to remember people complaining, like I got stopped out by an enormous wick, and it's like they happen all the time. Like that you try and make that your edge to be, snipe those.
There was a massive edge in BitMEX. You'd wait for the liquidations to pop up, and once the liquidations, you'd see a spike in licks, and you just think, yeah, right. And you see a rolling balance in the order book trying to fill the liquidations and whatnot, and you think, yeah, okay, hit it.
There was so many easy edges with BitMEX. Like there used to be one, if a 10 mil buy market order went in on Aga, you just copy traded it because they were going to be profitable. Because it's probably Glim actually.
Probably at the time, yeah. But they were good times. But I guess you just got to evolve with the market. But looking at the current Bitcoin chart now, I think we will inevitably see some form of a healthy pullback correction. I was leaning to the camp of possibly seeing a recession end of 2023. Could say I was wrong, but that's fine. I'm not here to call a recession and make money on calling a recession. I'm here simply because, like, it's understanding how much money do I want to have in this market, and again, it's understanding what you're comfortable with and what the potential risks are out in the next 3 to 6 months. And I just look at the market and I think, okay, Bitcoin's ran. It kind of caught me off surprise. I was doing very, very well in terms of trading up until the end of Q3. Q4, equities took off, NASDAQ took off. There was liquidity inflows into global markets, and Bitcoin, obviously, you could say, you could argue, did it really rally off the ETF fight? Maybe it had a role to play. That's what we're going to assume to be the case. I think liquidity also played a part in Bitcoin rallying higher. And I just don't know what 2024 holds, other than if there's anything that I can take from this, again, and probably I'm somewhat, I wouldn't say guilty of it, but had a tendency to lean into being slightly more defensive. It's all well and good saying that in hindsight now, looking at the charts, but I'm okay with that. I can live with that because I haven't lost anything and I preserve my capital, and I'm looking at this game from a 10-year horizon, not can I hit a home run in the next 6 months. So, it's understanding that you will always miss opportunities, but as long as you're not pissing money away, that's fine. If I'm burning money, then that's a different story. That does not sit well with me.
I think that's a lovely place to wrap it up, honestly. Got a little bit of a sneaky alpha at the end in terms of your insights, XO, and I think we're on the hour. So thank you so much for coming on, joining us. Hopefully everyone found that nice and valuable. I definitely enjoyed listening in. And Jim, as usual, thank you for hosting. And thanks everyone for listening in, and we'll see you next time.